This is OwlUp, where learning happens in minutes, not hours. For a deeper journey, explore all our courses at owlup.co. Now, let's dive in. Welcome to Chapter 1 of our series, Mastering Freelance Taxes. In this episode titled, Understanding Self-Employment Tax Basics, we're going to break down what self-employment tax really means and what it includes. So, whether you're just starting out or have been freelancing for a while, you'll want to tune in to grasp these essential concepts. Let's dive in. You earn $1,000 from freelance work, and somehow a few hundred of it disappears to taxes you never saw. No paycheck stub, no HR, just a vanishing act. The paradox is this: you're both the boss and the employee. So why does tax season still feel like a mystery? So here's the twist most new freelancers miss. The government doesn't really care what you call yourself: contractor, creator, consultant, only how your money shows up on paper. The moment your income stops flowing through a paycheck, the rules quietly change, and a new label appears: self-employed. That label unlocks a different set of forms, deadlines, and opportunities. In this episode, we're zooming in on one piece of that puzzle: the self-employment tax. Not income tax in general, not fancy write-offs, just the specific charge that kicks in once your freelance profit crosses a surprisingly low line. It's the baseline cost of playing the game as your own shop. We'll break down when it starts to apply, how the percentages really stack, and where the system actually gives you something back for carrying the whole load yourself. Here's where things get concrete. The IRS doesn't wait until April to see how your year went. It expects you to act like a tiny finance department all year long. That means tracking your net earnings, hitting specific payment dates, and knowing when a side project quietly turns into something the government treats like a business. Cross certain dollar thresholds and extra layers kick in. Different rates, special forms, and even potential bonuses in the form of deductions. Think of this episode as unfolding the rulebook so you can spot those thresholds before you trip over them. Here's where the rules get more mechanical, but also more predictable. Start with the trigger. That $400 floor isn't about what clients paid you. It's about what's left after business expenses. Cross it, and the IRS expects you to calculate this separate layer of tax on Schedule SE. You're no longer casually earning. You're officially in the "you owe us payroll"-style money zone. The core idea: the government pretends you're running a tiny company with exactly one worker, you. On paper, you're both sides of the paycheck. So it layers two sets of payroll contributions together and calls it self-employment tax. That's why the percentage feels chunky. It's replacing what a traditional employer would have kicked in on your behalf. But the system isn't perfectly brutal. You don't pay this on every dollar that ever hits your bank account, only on profit from your business activities. That's where tracking costs, software, gear, subcontractors, mileage, quietly becomes tax planning. Lower profit means less exposed to this specific tax, even if your total income, from all sources, is higher for income tax purposes. Two thresholds really shape the terrain. Below roughly the Social Security cap, you're paying into both Social Security and Medicare on that profit. Above it, the Social Security piece drops off, while Medicare keeps going. And a small Medicare surtax can kick in at higher overall income levels. So the percentage on your next dollar isn't always the same as the percentage on your last one. As your business grows, the mix shifts. Here's the part most people miss. The government knows you're effectively doing the employer's job. That's why half of this self-employment tax can come back as a deduction before income tax is calculated. It doesn't erase the payment, but it shrinks the income number other taxes are based on. Think of it as hiking a steep trail. The grade doesn't change just because you're tired, but the map does show switchbacks, plateaus, and rest spots. Once you know where they are, you can pace your steps instead of being surprised by every incline. Maya the designer clears $5,200 after buying a laptop and software. Instead of staring at that total and guessing, she zooms in on how her projects stack up. Her logo packages are like individual trees in a forest. Each one has its own revenue, its own costs. One logo might bring in $800, but require a $100 font license and $50 outsourced illustration. Another might cost almost nothing but take far more time. When she sees which trees are actually healthy, she can decide what to grow more of next quarter. Now contrast that with Leon, a developer juggling one big retainer client and sporadic bug fix gigs. He realizes that bundling everything into a single lump hides useful patterns. So he separates client types, payment terms, and even how often each gig leads to follow-up work. Suddenly, he notices that late-paying projects also tend to need rush weekend fixes. Instead of just accepting it as more income, he experiments with premium pricing for those jobs, or stops taking them at all. Your numbers stop being random once you view each stream as its own small ecosystem rather than a blur. As rules evolve, treating your numbers as a live dashboard instead of a yearly report becomes crucial. Lawmakers are testing ideas like platforms auto-withholding part of your pay and tools that sync your books directly with tax agencies. That could feel like cruise control, less manual math, but it also means your financial flight data recorder is always on. The upside: easier planning for savings, benefits, and retirement. The trade-off: you'll want to be choosier about which tools see your raw money trail. Treat this as learning a new instrument, awkward at first, then almost musical. As your income shifts, the rules you've met today start to shape choices: how you price, what you save, when you say yes. Your challenge this week: run one recent project through a SE tax calculator and note how that single decision ripples through your bigger money picture. This was OwlUp, your daily step forward. To keep learning with structured courses and more insights, go to owlup.co. Until tomorrow!